Welcome back to the Ryun Givens & Company Tax Blog. I'm Curt Brand. Each week we will look at an area of taxation to provide you with knowledge and help you plan for the future. Today will be the first in an installment of issues covering healthcare reform legislation and related tax changes. We are going to take a detailed look at the increased hospital insurance tax for high-earning workers and self-employed taxpayers. For tax years beginning after December 31st, 2012, an additional 0.9% hospital insurance tax applies to wages in excess of $250,000 for joint returns, $125,000 for married taxpayers filing a separate return, and $200,000 in all other cases. This tax is a component of the Federal Insurance Contributions Act. The additional 0.9% hospital insurance tax also applies to self-employed income for the tax year in excess of the amounts on your screen. Beginning in 2013, the employer portion of FICA consists of 2 parts, and the employee portion consists of 3 parts. An employer pays a 7.65% FICA tax consisting of 6.2% Social Security tax on the first $113,700 of an employee's wages. The maximum tax is $7,049.40, or 6.2% of the $113,700, plus 1.45% Medicare tax on the employee's total wages with no ceiling. For 2013, an employee pays 6.2% Social Security tax on the first $113,700 of wages. The maximum tax is $7,049.40, or 6.2% of the $113,700, plus 1.45% Medicare tax on the first $200,000 of wages. That's $250,000 for a joint return, or $125,000 for married taxpayers filing a separate return. And the employee also pays 2.35% Medicare tax. That's made up of the regular 1.45% Medicare tax plus the 0.9% additional Medicare tax. This is on all wages in excess of $200,000 or $250,000 for a joint return, or $125,000 for a married taxpayer filing a separate return. Employers must begin withholding the additional 0.9% Medicare tax in the pay period in which wages are in excess of $200,000 and continue to withhold it until the end of the calendar year. The tax is only imposed on employees. All wages that are subject to Medicare tax are also subject to the additional Medicare tax withholding if paid in excess of the $200,000 withholding threshold. Under IRS guidance, an employer must begin withholding at the $200,000 threshold, even if the employee might not ultimately be liable for the tax. So this would apply if a married employee files jointly and makes over $200,000, but the couple's combined income falls below the $250,000 threshold. In this case, any excess Medicare tax withheld will be credited against the total tax liability shown on the employee's return. If you would like to discuss how these issues affect you and your tax situation, please email us or call us at the number on the screen.